Welcome back to Solutions for Financial Independence. Joining us now, John Halterman with Beacon Wealth Management. How are you doing, John?
Hey, I'm doing great, Nikki. How are you?
Doing well, thank you. This week, our question is related to the stock market.
Okay.
There's a lot of options out there. If someone is just wanting to get involved, should you go low risk, high risk, medium risk?
You know what? You said it right. There's options. But the first thing that I always tell people is you've got to identify some parameters. As an example, the first parameter you should be thinking about is, what's the purpose of me investing? So if this is for retirement, and let's say you're your age, you've got 40 years away to go to retire. So you have to look at that and say, wow, that's a long time frame. Versus if you're 55 and you only have 10 years away. So the things you have to look at is, number one, find the purpose, whether it's retirement, education, whatever it may be. Number two, look at the time horizons, because time's a big deal. I always equate retirement planning to climbing a mountain. On the way up, it's kind of easy at the bottom, because if you make mistakes, you just start over. But the higher you get, the less there's a margin of error. And especially when you're descending off the mountain, there's no margin of error. So time's a big deal. The third thing you should be looking at is your actual experience. Have you done this before? What do you know? What do you not know? Fourth thing you should be thinking about is, what type of risk taker am I? Clearly, stocks involve risk. And there's a great chance for potential return, but there's a lot of fluctuation along the way. If you're the type of person who's uncomfortable losing money, well, don't invest in the stock market. But if you're the type of person who says, I may be uncomfortable, but I have time on my side for recovery, and I'm trying to max out my return, then you're a good candidate to invest in the stock market. So it's all going to be about your personal situation. And when you assess that, then you figure out if it's suitable. But for suitability, you've got to be a risk taker. You've got to have time on your side. And you've got to understand that you're trading off potential return for short-term risk.
All right. Thank you so much, John. Folks, if you miss any of that, you can always find it online. Don't go anywhere. Much more for you after the break.